Today we are diving into a day trading strategy for beginners. Simple, effective, and perfect. So now here, this strategy, we shall consider mostly two things. First of all, we shall consider what we call the break of market structure, and we shall look at kind of order blocks and fair value gaps in this strategy. Okay, so now let's dive into this strategy, right? So now this was our low that was made here. So now this was our low that was made right here. Okay, so now after identifying that yes, we have made this low, see that yes, it made this high now. So there is this high now that it has been made. Okay, so now what do we call this? We call this break of market structure, right? So yes, okay. So now we either break this low or break the other high. Okay, so now as you can see, this high was broken, right? This high was what was broken. Okay, so yes, so now also that is a break of market structure. Okay, so now as you can see, when that high is broken, what do you do next? That means you look for some of your zones, right, on your discount level, and the zones I told you we shall consider what we call order block. Okay, and we shall also see some of the fair value gaps if they are there. So now that's one order block there you can look at, and also there is this order block in your extreme zone. Okay, there's this order block in your extreme zone too. Okay, yes, so now let's wait and see how the market reacts on that order block. Okay, you can see that when the market reaches our zone that we marked here, this order block, right, you can see how the market is reacting. Okay, it is giving us a reaction after reaching that zone. Okay, that means someone would just enter from right there, and you put your TP right there. Okay, as you can see, that was a very nice reaction. Okay, so now that means here we have formed a new low. This one, you call it a new low that has been formed right here. So now when we form another low, this is a new low. When we form a new low, and now we either wait for this low to be broken or this new high to be broken, right? So now when this high is broken, we shall consider it a break of market structure, and when the low is broken, we shall consider it as a market structure shift, guys, right? So now let's wait for either way to go. Okay, as you can see now, this low was broken, and when this low is broken, we now consider it as a market structure shift, and some people, you can really consider it as a change of character. Okay, so now when that low is broken, so now you come up here and you look for some zones, that is a fair value gap or order block, right? So now we have one fair value gap right here. You can take this fair value gap. Okay, so now you wait for the retracement to come to your zone. Okay, you wait for the retracement up to your zone. So now when the market reaches your zone, okay, you can see it was just passed through, but up here you would also consider what we call support, right? There is a resistance level, right? Up here there was a resistance level. Okay, so now you can wait for this level to be taken out, right? To be taken out as a liquidity before you enter the market. As you can see, when that resistance level is reached, right, when that resistance level is, you can see that yes, the market gave us it gave us a reaction. Then it would be very, very good to enter from right there. You put your stop loss up there, then you put your TP right there, almost 300 pips, right? You can see the reaction of that market, guys. Okay, so now let's wait for the reaction of that market, guys. And you see, can you see this, right? Can you see how the market reacted after identifying that zone, right? That resistance zone. Okay, so now remember, we have now this low. Okay, so now we have this low right here. Okay, so now we have this low right here. Either this low is we wait for either low to be broken, because now this is the new low that we do have, right? Because now we are in a bullish market, we are breaking higher highs and higher lows. Now we are making lower highs and lower lows because the market turned from bullish to bearish, right? So now let's wait for our market to reach our zone. Okay, so let's wait for the reaction of either side. Can you see this? Can you see this? Now the market didn't come to our to our low right here. Rather, it reacted somewhere here. Let's see whether there were a certain zone that the market used to react. Actually, it used a support level, right? There was a support level right here the market used to buy, right? There was this support level. So now those people who use support and resistance, this was a very nice trade for you guys, right? So now those guys, they would just enter right from here. When the market reaches there, you can get also confirmations from the lower time frame. Okay, so now you target somewhere here, almost 400 pips, guys. But remember, we are still bearish because of the other market structure shift that the market made, guys. Okay, so remember, this market had made what we call a market structure shift right here, indicating for us that yes, we turned from bullish momentum to a bearish side. Because of this, remember that. Okay, so now remember, we also have this this resistance level. Okay, so now we have that resistance level. Since the market reached your resistance level, you can wait for some reaction, for some rejection from there before you can enter the market, right? So let's wait. So remember, now we should not trust that so much, because remember, we are trading market structure. Remember, this was a high that was resting here. So when this high is broken, that means we shall be turning from bearish to bullish. Okay, so now you can see that yes, this high is now broken with full body candles. For us, we consider full body candles as a break of market structure. Now when those full body candles are broken, yes, we consider it as a market as a break of market structure, guys, right? So now let's consider that. Okay, can you see this now? So now when that high is being broken, it created another high right here. It created another high right here, though it wasn't broken, so we call it a failed high. Okay, so now also that failed high, we always consider it as a confirmation for these day traders, right? So now you can see this previous low that the market had left. So you can see how it was broken. When that previous low is broken, we consider that as a change of character. You can also consider it as a market structure shift. Okay, so now when you go up here, you'll see there are some zones that the market would come to before it sells again, because now we have turned from bullish to bearish, guys. Okay, so now there are some two zones here you can wait the market to come to before we execute a trade. So there's this first zone. You can actually you can risk from this first zone, right? Okay, you put your TP and you put your stop loss right here, and you see whether the market will move, right? So let's risk on that. Okay, can you see that? Can you see that, guys? So the market just moved so well, right? Can you see how the market moved? It used this first zone to give us a reaction, and you can see that yes, because of that market structure shift, you can see how the market moved. Now it created this low, right? It created this low. Now this is the lower low that we can wait to be broken, and when that low is broken, we shall do what? We shall say yes, now we are still bearish. Yes, now the market has started going down, right, and leaving these fair value gaps behind. That means these fair value gaps can be turned into, and we consider and we buy and we sell from them again, right? So now you can wait for the market to come back to those fair value gaps before you can sell again, guys. Remember, now it has started creating another lows, right? This is another low that the market has started creating, right? Can you see that? Because now it is making a retracement. Okay, can you see this now? That was a low, okay, and that low is broken now. It created this higher low, sorry, this lower high. It was right here, this lower high. So now when this lower high is broken, we shall consider it as a market structure shift today upside. Guys, are you following me, guys? Okay, so now when that one is broken, we shall consider it as a market structure shift. As you can see, it was broken. Okay, so now when that one is broken, we shall now go down here. Okay, we shall go down here and we indicate our fair value gaps right there. So when the market comes back to that fair value gap, we shall do what? We shall buy it again. Rather, it didn't come back, but let's see, let's wait. Can you see this, right? It just turned from right here. It just turned from right here, guys. Okay, it just turned from this zone right here. Okay, then we are targeting this big fair value gap. Remember, there was this fair value gap that we can wait for the market to come to before we can sell it again. Okay, can you see it? When the market tapped in that fair value gap, can you see it? Okay, it tapped in that fair value gap that was there, that we marked, right? So now let's see the reaction. Okay, let's see the reaction when the market taps in that fair value gap, whether it will give us some good reaction or not. Okay, so now let's see this, right? So now that zone was used as liquidity. That fair value gap was used as liquidity, and the market was just targeting some. It was targeting a resistance zone. There was a resistance zone right here. Okay, sometimes not all the trades that will go in your direction. Okay, can you see this resistance zone this market was targeting? It just came to this resistance zone right here. I've marked with that horizontal line, and it gave this reaction almost 300 pips, guys, right? So now sometimes some zones will be used as liquidity. Now like that fair value gap was used as liquidity, and others, that means it's better to risk small, guys, right? So now you can see that you can use this strategy to day trade always, right? To always get some trades every day. When you combine market structure shift, when you combine break of market structure, change of character, favor gaps, and order blocks, you'll see that this strategy will work for you guys, and it works to all pairs that you can really trade. Though we have used only one pair to give you examples, but you can try and backtest on all your pairs. You'll see that these trades, they will really move very, very, very well. So thank you for watching, guys. This is Jimmy. Stay safe and goodbye.